We operate across Western Europe right the way through to Bulgaria, which is a very interesting place. And we certainly see that the Slovakia, as I mentioned earlier, Slovakia, Czech, Poland are the hotspots of Central Europe. The pricing, as James said, if you look at, for instance, Slovakia, where you're slap bang next to Austria, where demand is strong, where we're starting to see some rental growth, yet yields are probably 75 to 100 bits below Western Europe. Yet it's only literally a few kilometres down the road. It doesn't seem to be logical. And I think that perhaps the next phase we're going to see a smoothing out of the yield differences from what was considered to be Central Europe and Western Europe. And I now see Poland, Slovakia, Czech as being more acceptable, and certainly investors we talk to see it very much as being a strong part of their portfolio going forward. And then the new peripheral countries are the Romanias and Bulgaria's, probably Hungary as well, where things can be a bit more challenging, but you can buy a 15-year lease in Romania to Procter & Gamble, probably for 11% in Romania, for probably around sub 8 in Poland, into probably sub 7 or even better in Germany, and probably in the UK even better than that, down to probably 6. So it's interesting that's shield when you're actually buying the same income from the same tenant in the same buildings, because there's no difference in the buildings. There are some difference, obviously, politically wise. So I think that as for the future, that's going to be one of the changes we'll see. But going to the actual hotspots, I'd still say Slovakia it's Euro-based. I'd say that key locations in Poland, and a lot more in the south now as well. There's been bigger demand in that area. Czech is quite a small market, but very little supply now.
In continental Europe, we think that France will remain a hotspot for logistics, taking into account the geography of France. Southern Europe, Spain and Italy, we are very, very careful right now regarding this country, and basically we think that we have to be in Germany right now, Benelux, but being very specific regarding Benelux, and one day in Poland, because Poland for me is the next country in which we are going to invest for logistic funds after having the right exposure in Germany and Benelux. But clearly, countries like Czech Republic, Hungary, it's small countries, and it's not a target right now for us.
People are asking all the time. So perhaps it's a bit of history. You know, always look for Prologis to go to the next market. The reality is back to that growth story, and back to the whole concept of relative immaturity of modern distribution facilities and the availability of them. We firmly believe that there is more than enough growth in the markets largely that we're already in, but that growth will come in slightly different shapes and forms, and so it'll possibly repeat a little bit of what the guys said. But if we work from the UK east, just deliberately because you did it the other way around, so UK is the biggest and most mature market, if you like. It's a very transparent market. It's also the most expensive market, but nevertheless it is a market where we think it's perhaps less attractive from an investment perspective, in terms of acquiring third party, but very attractive from a development perspective, which is where we're strong. Moving across to Southern Europe, I agree with France, but it's been very, very slow over the last 6 months, but I think that is a moment in time. I think Spain is interesting. We believe in it, not wider Spain, but Barcelona, Madrid. And in fact, we acquired for one of our funds a 60,000 square meter portfolio. We bought it at a 9.5 going in yield. We think that's a pretty reasonable spread relative to what you would buy of equivalent quality in say, Germany. And why buy in Spain, and how do you underwrite the macro risk? We haven't necessarily underwritten the macro risk. We've looked at the constraint in that market. Very hard to bring new buildings through, very hard to acquire land. The topography of the market makes it very difficult to build big buildings. So a very constrained market where those basic fundamentals really drive it. I'm not suggesting that you all go out and buy Spain all day long. I think there are some very selective opportunities there. Italy, northern Italy is a huge economy, and that's not going to go away. So I think there will increasingly potentially be very interesting opportunities. I think most owners in Italy that are looking for an exit are really struggling right now, and it's only a matter of time before we see some real pricing adjustment. Germany is obviously a place you want to be, and we continue to selectively acquire assets there. But it's hard work, really off market. It's hard once you get into pricing competition with the big German institutions. The likes of DECA and Union are always going to typically pitch a little bit more than we think makes sense for our investors. And I think Central European markets have a long way to go. I do believe that the only spread that will occur once we get over the uncertainty between Germany and Poland in particular is going to be pricing in currency risk. It certainly won't be the spread that we see today. So it's quite different dynamics, both in terms of available product and pricing. But I think we're back to something that's logical relative to the maturity and transparency of the markets. There was a time when there was virtually no difference between UK, Western and Central, and that makes absolutely no sense. We're back to a place where pricing is clearly differentiated between UK, Western and Central, and I think there always will be some little bit of difference as we work across, because simply transparency in those markets is different. Going into new markets, the reality is we'd look for that to be largely customer driven. We need to see a weighted demand coming from our customers where their businesses are constrained by the lack of availability of good quality developers to bring new product into those markets. But it needs to have some scalability about it over a relatively short period of time. So we're probably going to stand tight for now, wait for Europe to get through its current concerns and worries from a macro perspective, capture the growth opportunity that's there in front of us, and new markets for next year.